Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is 10:30 a.m. in the UAE, at least. It's different timings everywhere else, of course. Gosh, what happened? Go. Um, Brent crude oil trading today a little bit up about 0.5% at 63.81. WTI is dropped below $60 and trading, sub 60, which of course is not an insignificant number. What is giving this market direction at the moment, or lack thereof, perhaps? It seems whenever the wind stops blowing, this market wants to go lower. And when the wind blows, depending what's blowing, but ultimately it seems to send it higher. But in still winds, Adi Imsirovic, Director, Surrey Clean Energy and Senior Associate at CSIS. Adi, your thoughts on the market sort of dynamic at the moment, if indeed it is responding to anything in particular?
Good morning, Sean. Good morning at the crack of dawn here in
Yeah,
England.
it's a
Still
terrible
very, very
thing.
dark.
Terrible thing.
My dog doesn't want to
You
wake
have to
up.
join the crowds and migrate to the UAE. I mean, geez,
Uh,
you must be left alone there. Last one, turn off those British lights.
Absolutely, yeah, to warm up my old bones. Yeah. So back to oil and the market.
Yeah.
Right. Well, several things. Obviously, the one recent one was OPEC, and the fact that they decided to sort of pause their increases. I think even in spite of their general secretary saying that demand is going up and up and up, I think they realized that it's not. There is an oversupply of oil. The good news is that OECD stocks are still fairly low. So we've got a lot of oil on the water, and that oil on the water has to translate into sort of increased stocks in on shore. Now, it is happening in one place, but it's a place where it's very, very hard to measure, and that's China. So China have been filling up their stocks, whatever they are, call them strategic, commercial. In China, it doesn't really matter. It's all one of the same. So they're in
But the
October.
point ultimately, Adi, is none of those things are giving this market a direction, or are they just all canceling each other out?
Yeah, I think they are canceling each other out a little bit at the moment. I think it's kind of a game of supply and demand. But I haven't come to the other two key things. I think one very important thing that's given some support to the market are sanctions, additional sanctions against Russia by UK, Europe, and the US, coordinated sanctions for the first time in a long time, which I think is very important. So I saw this week Reliance Industries, the biggest refinery in India, buy very quickly over a matter of days 12 million barrels of oil in the spot markets, primarily Middle East and South American oil. That certainly gave support to the market. We saw the Saudi OSPs have been dropped further, with a hint that the Saudis are keen to retain, if not increase their market share. And the last one, but I think is probably eventually will be the most important, Sean, are the macro factors. Macro is the key for the flat price. And yesterday in the United States, we saw the job data, which was very, very poor. Companies announced about 150,000 odd job cuts the month before, which is almost triple the number, triple what it was the same time last year. These are big job losses. This is the biggest number, negative number since 2003, apparently.
I suppose the
So now,
challenge there ultimately is what
yeah,
can you trust in the numbers coming out of a country where the government has fired the number people, and the
and it's
government
not
is in
functioning.
shutdown? Uh,
Absolutely.
Mukesh Sadhav, founder and CEO of X Analysts out there in the wilds of Australia, posting on LinkedIn ahead of our show today. OPEC plus this and OPEC plus that and OPEC plus the other thing, and nobody knows what the hell they're talking about except Mukesh Sadhav. And thank God we have him on today. Tell us, Mukesh, which of these OPEC plus headlines do we need to know about, and which one gives us the insights as to some sense of direction here?
Thank you, Sean. Well, my answer is none of these headlines are giving the direction. What is, I would say, as you know, hips don't lie, numbers don't lie. And let's look at the numbers, right? If you look at the trade flow data, and I look at Vortexa data, clearly from the lows when they were exporting the crude oil, and since they started to bring barrels back, maybe 1 million barrels more back, crude exports have increased.
Over the course of the last 8 months, since the increase started in April, May time.
Correct. Now
so let's look at close to 2.5 million barrels of actual quota increases, but you're saying only 1 million barrels of actual supply.
Correct. Now let's look at the product exports, which is another most important story in my mind, is that we had very high numbers above 9.5 or 9 something million barrels. But the numbers have dropped by 1 million barrels on the product side. So it's a calibration of the market that's happening. Bring crude now and take products away, which is giving some strength to the product cracks, giving strength to the margins. And that is what I would say the stabilization mechanism which OPEC has found out to calibrate the crude and the products. So we are adding crude, removing products, as simple as it is. I think the nuance of market share probably needs to be looked as a total rather than just looking on the crude side.
Looking to those who've been in ADIPEC this week, of course, the biggest oil and gas event in the world now, exhibition and conference. Osama Rizvi, Global Market and Product Strategist at Primary Vision. Osama, what did you take away, if anything, from the large amount of noise at ADIPEC this week that might give this oil market some direction? We've been stuck at $65 Brent for months now, drifting down, as I say, whenever there's not too much news around. Your thoughts on anything that you heard this week at ADIPEC that might raise this market's attention?
Well, Sean, thank you so much for that very interesting question. I think when we talk about factors that gives markets, oil and gas or energy markets, the direction there's some short-term and medium-term ones, and then there are the long-term ones. In the short to medium term, as Eddie and Mukesh said, we are looking at essentially this sentiment shifting very quickly, either towards the bearish side or the bullish side. I think. One of the things that I gathered from ADIPEC was that there seems to be a unanimous, perception that there is an oil glut, if not to the tunes of 4 million barrels per day, as per the IEA, but also on the other hand, when OPEC says that the demand is also growing, that is also not correct. So it's somewhere in the middle. We are seeing more supply essentially, and the demand is not there. And I actually wanted to build up on what Eddie said regarding the macros. I think macro is another factor that is going to give direction to the oil markets on the demand front. We have seen, we need to realize that there is a bit of a lag factor in the events and their impact on the markets. We have seen this happening manifest itself very clearly in the US job markets. It was going really strong, and all of a sudden, 1 month, they started to go down, and it has been the trend. For the longer term, Sean, one of the most important things I sort of realized was, of course, AI. That and its integration in in oil production or in the oil companies, NOCs or IOCs, both. That was the main highlight. But it also it also tells a lot about where the future is heading towards. Like all of the AI technology was being used to enhance oil production, to reduce the time of seismic, data, to reduce the time of decision making, to have more reports. All of that feeding into the ambition of more oil production. So that really speaks about the peak oil demand, peak oil supply thing, And I think we are, if anything, we are very, very far away from the peak of oil and gas as an industry and supply as well. That was my key takeaway from ADIPEC this week.
Adios. One of my key takeaways from ADIPEC this week, of all the data points I heard, was that the current idle capacity available in the world, putting aside but idle capacity that you could actually walk over to the wall and press the button and new oil would come out in 5 minutes or so, is only about 1 million barrels a day. That there is actually, the world, the markets haven't woken up to the fact that idle spare, press a button and it comes out, the pipe capacity idle is only 1 to 1.3 million barrels a day. That's a pretty low number the market should be reacting to, should be reflecting a greater strength. Your thoughts on that?
Well, you might well be right. I'm not sure with that.
I'm just saying it's a
is...
data point I heard. I have been
Yes.
an evangelist of the idea that the idle is lower than the market is appreciating.
That may let's go with the
And I
assumption,
mean
Sean,
press a
that that's
button,
correct.
stuff. Press a button, not like go send the engineers out in the field in 3-6 months they'll put up the number.
But what's pressing the button even quicker is demand, and demand is just not there. And that's the problem. I think that's the biggest problem with the oil market. It's not the supply, it's demand side of the picture. On the other hand, we see, I would just like to build up a little bit on the supply side from what Osama said. Yes, technology has been huge. Look at the United States production. Everyone's been doom and gloom counting rigs all this year. And month after month, we've got production going up. It's technology, it's know-how. It's, things are getting better, smarter, cheaper. United States is now producing 13.8
And rig counts are
million
getting
barrels.
lower.
Yes, 13.8 million barrels a day they're producing. They've just increased month on month yet again. So having demand slowing down is not really helping at all. So you might well be right, but the market is finally balanced. I think the one point that hasn't been mentioned yet, which I mentioned last time I was on your show, was that, look, one of the reasons why oil is not collapsing is because it's already really, really low. I think people are forgetting how low this oil price is relative to all the other commodities, relative to the stock market, relative to everything else.
That was another data point I heard at ADIPEC this week. Relative to gold, it's at 100-year low oil price.
That's a very good data point, I think. And given that the dollar is weak and most likely to remain weak because everyone is expecting there's about 60% chance of another interest rate drop, given that we are living in inflationary times when everyone is in debt, all the governments are in debt big time, and the only way out of this debt is going to be through inflation, having oil at these levels is pretty ridiculous.
Mukesh, how ridiculous is it? Your thoughts on the point with idle capacity, and also give us some insights from your recent trip to India, but just sort of take on the idea of there's a sense in the markets these days, once upon a time, geopolitics at this level would have oil prices up $100, $150. It's a new era. It doesn't react. Once upon a time, idle capacity used to sort of give the market a lot of heartburn and so elevate the price. Are we now in an era where idle capacity is no longer as critical as it used to be?
No, the short answer is no. And I think we need to look at the problem in a different way of idle capacity. So let's think this way, Sean. From 2010 to 2019, the oil demand in the world was growing about 1 to 1.5 million barrels per day average. If we draw a straight line, yes, China was growing more than 500,000 barrels or more. So if you draw a straight line, and if we put the number of what the number would be 2025, that number would be close to maybe 4 to 5 million barrels higher than where we are. So when the demand has gone down for various reasons, I will not get into real demand dent, the supply capacity, idle capacity, probably is not a big problem. if we had continued to grow at the same rate of million barrels per day from 2019 to 2025, then yes, I would have been worried about idle capacity and talking about any scare leads to very oil price spike. So I think that's how we need to look at spare capacity, not just from the production point of view, but from a demand point of view. Now, on the other point, which I also want to make, which is around the US, right? US is a treadmill now. It's flat. If you look at the December 2023 lower 48 crude production, 11.1, December 2024, all the wells which were drilled before December 23 were dropped by 4.3 million barrels per day, and the new wells added 4.4. The number at December 2024 end, same number. December 2025, it might be even a lower number. So the
Sorry. That's my brain can't quite comprehend all.
Okay.
Say that again. Basically U.S. production is remaining flat because they're just managing to keep up with declining production.
Correct. Yes, EIA just came out with this report today, and I kind of fully align with those numbers. December 2023 to December 2024, the lower 48 production was flat because the declines and the new additions offset. Similar thing is happening this year as well. So there is no drill, baby, drill. Now, the one big factor which I would call, Sean, why is it not happening is the US needs the heavier barrels from Canada, heavier barrels from Mexico, Venezuela, if they want to produce more domestic light barrels. It's a blending play, and US has lost probably that blending edge. The import of the heavier barrels is stagnating around 60%. They are not getting more barrels. So if US wants to produce more, they need more.
They have to invade
barrels.
Venezuela and take all their oil, and so they can export all their sweet oil to Asia. Is that the kind of the plan?
Well, the US Senate just voted to limit Trump's, and I don't think there is a resolution coming. So from that point of view, I don't believe that US shale is probably a whale right now, very slow moving, and the spare capacity probably not a big reason. So I don't see oil prices spiking, Sean. I don't see oil prices going down. OPEC is in good control of both the crude and the product. I think sounds like repeating same time, but that's what is happening. Third point, very briefly on the India side, we just heard about, you talked about India is preparing for all scenarios. I spoke to a lot of refiners. They're preparing for all scenarios. Now, we heard the news that Reliance sold a Iraqi barrels cargo to a Greek refiner. My sense is that they're preparing for those sanctions where Europe does not want any products made from Russian oil. So instead of consuming the Russian oil over a period of time, my sense is a lot of oil was overbought. And now there is a drive to consume all of the Russian oil in a faster rate. And that leads to some Iraqi barrels or some spare barrels to be sold on the market, obviously on a profit. So Indian refiners are probably preparing for and doing all the mathematics for those scenarios. And this sale of Iraqi barrels was one signal that is happening.
Well, Sam, the other big data point I took away from ADIPEC this week was the CEO of Vitol saying that seeing a $60 Brent price next year, 2026, similar echoed on the same panel by the top commodity executive from Morgan Stanley. That's great news for Pakistan, isn't it? Another big oil importing country, energy consuming importing countries in Asia. What's the outlook of all of this for you and your neighbors?
Well, Sean, before I answer that, very briefly, if you allow, can I talk a little bit about the US shale thing as well?
The shale thing.
There is a lot of confusion and different perspectives whether the US production will stall or has peaked or whatever. But as Mukesh said, data doesn't lie. So what recent data has shown is just very interesting and surprising behavior. The frac job count, referring to the actual number of jobs being performed, despite oil prices going down year to date, it has increased 9% on year-on-year basis. Frac spread count is down 13%, but still the number of jobs being performed is going up, is not going down. And I can also tell you that this is not only happening in Permian. I'm talking about Williston, Bacon, and other shale basins as well, where the production or the number of jobs, drilling activity has either remained steady or has inched up. And this has been the trend, at least in the previous month of October as well. So essentially, the utilization rate from every frac or every rig or every job being performed has gone up, like coming full circle to our point of technology, use of technology, as Eddie mentioned. Now, on to the other point, as you asked, Pakistan, yes, of course, we have all the oil importing countries happen to be at a point where when and if oil prices are going down, we expect our import bills to rationalize, and we also expect that it will trickle down, to the common man, the benefit of it. However, unfortunately, this is only one part of the picture. When we talk about Pakistan, Sean, rising debt happens to be a big issue, and I was just reading about this in Al Jazeera or somewhere that we all know that the amount of sovereign debt, especially in the global south, has increased exceptionally post COVID. And that, once again, we talked about direction for the energy markets. That is almost like a tail risk, that what happens if this causes a recession, like a literal recession in the global south. We need to look at these tail risks. Similarly, we forgot about the trade war, right? In the previous few years, it has come back. Similarly, this can come back. So oil prices going down, really good news. But will the government be able to pass on the effect to the common man? There will be other elements to it. There will be other factors to it. Food prices, that we have had recent floods. It has essentially changed all of the growth projections for Pakistan. And therein you bring climate as another factor. So the bigger picture is quite messed
There's
up.
no 1 and 1 is 2 there,
Yep,
obviously, but
yep,
there is
yep.
1 and 1 is 2 for the biggest Elon Musk universe. Let's go to the survey question. Tesla agreeing to Elon Musk $1 trillion payday signals what exactly? Signals 1, the market collapse is imminent. Who's the lunatic signing off on that? They're more than drunk on whatever they're drinking. Bull run to roar on. No, it's the exact opposite of market collapse. This is the dawn of yet another new age of bull run at $1 trillion payday. If it's Elon today, who's going to get the $1 trillion payday tomorrow? 3, peak oil sooner than later, because in order for Elon to get a $1 trillion payday, every car on the planet has to be a Tesla EV, and so oil has to be extinct. 4, irrational exuberance on steroids. Your thoughts, Tesla agreeing Elon Musk $1 trillion payday. One has to note that the Norwegian Sovereign Wealth Fund, a large shareholder in most companies of the world, voted against this, but they were clearly in the minority at Tesla, and so Elon has his golden. Probably golden isn't enough for this kind of scale of money. I don't know what the metal is for that. Adi Imsirovic, but really back at base, and one has to think about what that all means in the sort of sober reality of people making decisions like that at the board level at a major company on the stock market. People have to be a little bit off on some other universe, and that's concerning on some basic level without being able to articulate exactly what it translates into. But more translating that I'm interested in to this morning, Adi, to get your views on, is this strange story that percolated through ADIPEC and ended up on the front page of the Financial Times today. Gunvor started the week out saying they were going to buy all of Lukoil's international assets, end the week saying, actually, we're not, because Trump said we're naughty. Your thoughts on this story? What did it look like, smell like to you?
I mean, Lukoil's story is a really interesting one, I think. As I said early on, I think for the first time there was a coordinated action. And in theory, these secondary sanctions could have a very, very strong effect. Now, I think I've argued for quite some time since the sanctions were announced. I think the problem is the first set of meaningful sanctions against Putin, but we know the TACO trade, and that's why the market has not reacted to it. Trump doesn't want high prices. As soon as the prices started going up, people started doubting whether the US will go through with tough sanctions. Now, going back to Gunvor buying Lukoil,
Lukoil's
to be honest,
international assets, which of course
absolutely. I don't
include
think.
major refineries in Eastern Europe. If somebody doesn't buy them, they could close and countries could be without diesel.
Absolutely, they would have to be nationalized. But Ganvor already has a refinery in Antwerp. They have good experience of that. As far as Ganvor is its cleanup, they've cleaned up their act, the old alleged relationships with Putin. What is a fact is that Ganvor has grown out of Russia. It continues to grow and make a lot of money on the basis of that relationship. They're very, very close to Russia and the Russian top echelons of power, one way or the other. They are clean as far as the West is concerned. They're perfectly legal. So the whole deal is perfectly legal as far as I can see, at least. However, as far as probably Putin is concerned, when he's sitting there, he's thinking like, great. No big deal. It's gone from one company to another. Shareholders of Lukoil are not too bothered. Lukoil was just worth mentioning, was one company that had very extensive trading capabilities, and the reason they had that was their policy from scratch was to actually hire very, very good people from outside Russia. So they had people from Statoil to Fibro basically running their crude oil business and trading. So they have those great capabilities. Now they will pass to Ganvor, and I think is a perfect match. What I think is very interesting is that how quickly that all happened. So it makes me wonder whether it was all set up quite some time ago as a like just wait for the trigger when it happens. So we just put it into practice, and he probably did. So nobody else had a chance to even sniff at those assets. But as far as Putin is concerned, no big deal. As far as the West is concerned, I don't think there's any big change. Business as normal, and we move on.
Mukesh, another sort of event over the course of this week, the big US elections results come in. Mayor of New York, both headline grabbing, but other sort of governors, etc. Big swing to the Democrats. Also this week, in the midst of all of this swinging to the Democrats, the U.S. federal government shutdown continues into record length of time territory, resulting in the busiest U.S. airports having to cut thousands of flights. As somebody who lived in the U.S. a long time, knows it well. What does all this mean? Do you think we should be paying attention?
I like to say no. I attended a recent presentation by Nasdaq chief economist Sean in Sydney, and he talked about the US, and I was quite aligned with his view that even if the Supreme Court blocks the tariffs is giving US $30 billion every month, right? And 50% is probably paid by the consumer. So I believe tariff and AI are here to stay. And AI is where US, and you talked about Elon Musk. I tend to think that AI is real, and AI is going to provide the big productivity boost. Like we have seen in the past, the manufacturing output in US has not gone down, despite 1 in 4 jobs were a manufacturing job. Now 1 in 11 is a manufacturing job, but the manufacturing output in US because of the productivity. So AI productivity will continue to grow. So tariffs are here to stay. Those are the two things I want to watch in the US. Everything else is a political, probably noise.
Political noise. Osama Rizvi, last word to you today. We are, as I said, trading. Where we go, market collapse imminent, more than half in this room, irrational exuberance on steroids, the other half, which is essentially the same thing, more or less, except in the irrational exuberance was the infamous quote by Alan Greenspan 30 years ago. Policy started to shift against the market at that time. I don't think market policy will shift against this market, but maybe just pure fantasy will. Osama, looking at the oil markets as we go into the weekend, what do you think one needs to be watching out for, positioning for? Are there any surprises in all of this?
Well, Sean, nothing surprises, business as usual, but I would be looking at Chinese oil demand and also what happens between the US and China in terms of the trade negotiations. And also, let's keep an eye on what's going on in Venezuela, whether, once
Yeah,
again,
those
US
cases,
intervenes or not.
particularly
Yeah,
Venezuela, anything could
yeah.
happen, right? And you wouldn't be surprised to wake up on a Saturday morning, a good time to do such things. That
Most of these things happen on a weekend. That's
yeah,
for sure.
for that the market absorb it, and certainly pretty spectacular headlines out of Russia last night that they could or would or may send their bionic new weaponry to Venezuela. That sounds like a bit of a far-fetched idea, but nonetheless, they said it. So things must be heating up. I mean, they are heating up. There's an armada now off the coast of Venezuela. Will it be there just for decoration or actual implementation? That's
But is it
certainly a
bullish
big
or
story.
bearish?
Is it bullish or bearish? I mean, that's a very good question. I think we asked it during the week. It probably initially bullish and then becomes bearish because one would say 30 years ago, Venezuela was producing 3 million barrels of oil a day. Now they're producing half of that, or not half of that, they're bringing 500,000, 500,000 barrels a day. So if you brought
Still
back
bearish.
a million or 2 million barrels of that crude that Mukesh was telling us about, that those Gulf of Mexico refineries love, and Chevron is a busybody down there, you could certainly see a bearish 2026 on
Maybe
that.
Yeah.
I would say, Sean, US needs the Venezuelan crude. US is not getting, they're trying hard different ways. They tried during the Biden time. Before they putting sanctions on Russia, they thought Venezuela will help them. It didn't work. I don't think it would work this time either. So that is why another reason I say US crude production is not growing.
Not growing. Okay, well, what is growing is my desire for a weekend. Osama Rizvi, see you soon. Thank you for your words today. Adim Sirovic, go back to bed, you crazy man. Mukesh Sadhav, thank you so much. Regards to Australia. Have a great day. Have a great Barbie. Is that
Thank
what they
you,
say?
everyone.
Have you got the Barbie language down, Mukesh, there in Australia?
Yeah, I'm ready for the weekend.
All the best, guys. Thank you so much.
Thank you. Thank you.
Bye.
Bye-bye.
Thank you. Thank you.